Hello, everyone, and welcome back to the GMS Weekly podcast. This is Henning, and we've reached week 52, the final week of 2025.
And I'm Ingrid. And Henning, it really does feel like the end of a very long, very turbulent year.
It certainly does. 2025 has been challenging not just for ship recycling, but for global markets overall. Tariffs, political tensions, volatile currencies, and shifting freight fundamentals all rolled into one.
And while there were moments of activity, especially with the occasional large LNG or bulker, the reality is that this was a quiet year on the recycling waterfront, largely defined by scarce supply.
That scarcity hasn't gone away either. Prices today are still a long way off the $600 per ton levels we saw back in early 2024, with consistently declining steel plate prices across the subcontinent and plenty of currency volatility along the way.
That said, there was something positive to close the year on, and that's the progress we've seen on Hong Kong Convention compliance, particularly across the Indian subcontinent just ahead of year-end.
Absolutely. Meaningful infrastructure upgrades across multiple locations leave the industry in a better position heading into 2026, and that's an important foundation to build on.
From a market activity standpoint, this week itself was very much in holiday mode. No reported market sales, and a generally quiet bidding environment, which is hardly surprising given Christmas week.
Freight markets didn't offer much support either. The Baltic indices continued their downward trend, slipping again this week to their lowest level since October, with capes and smaller segments both under pressure.
Oil prices moved slightly higher on the week, but still closed December well below last year's levels, while steel prices across key markets shifted from modest moves to flat, to in some cases, no trading at all.
Turning to Bangladesh, sentiment softened toward the end of the year. Many yards filled up during November's rush, leaving very limited local resale options through December.
Steel plate trading effectively came to a standstill this week, and while the taka firmed marginally against the dollar, domestic fundamentals remain unpredictable.
On the operational side, though, Chattogram anchorage saw healthy arrivals and noticeably improved inward clearance times, with several vessels arriving and delivering within days. A positive note to end the year.
Looking ahead to 2026, Bangladesh still appears relatively well-positioned from a recycling standpoint, though political tensions ahead of February's election remain a key variable to watch.
India, on the other hand, closes out 2025 firmly at the bottom of the subcontinent market rankings.
A difficult year for Along, falling steel prices, a sharply depreciating rupee, and what many see as a missed opportunity to fully capitalize on HKC-approved capacity, especially during periods when competing markets were better supplied.
Steel plate prices in India fell roughly $70 per ton over the year, while the rupee weakened significantly against the US dollar, particularly in the second half.
That said, India's broader economic picture remains relatively strong, with solid GDP growth and easing inflation. So there are still reasons for cautious optimism once recycling volumes eventually return.
Pakistan arguably ends the year on a more encouraging note.
Yes, the approval of Pakistan's first HKC-compliant recycling yard is a major milestone, and more approvals are expected in the first quarter of 2026.
Fundamentals there have remained comparatively stable. Steel prices stayed well ahead of regional competitors, and currency movements were far more contained than elsewhere.
While imports of cheaper steel dampened buying enthusiasm at times this year, Adani enters 2026 with improving infrastructure, declining inflation, and buyers ready to re-engage.
Turkey rounds out the markets this week, and much like the rest of the year, it remained quiet.
The Turkish lira continued its gradual slide, and tonnage arrivals were sporadic, leaving Aliaga recyclers hoping that improved volumes in 2026 can help break the lethargy.
As we close the books on 2025, indicative pricing still shows Bangladesh at the top of the table, followed by Pakistan, India, and Turkey, though sentiment remains broadly weak across all destinations.
And with freight markets expected to hold into early 2026, vessel supply for recycling may remain delayed until surveys and dry dockings begin to kick in,
which could ultimately give compliant yards in Pakistan and Bangladesh the opportunity to take the lead as more capacity comes online.
And with that, we officially say goodbye to 2025.
From all of us at GMS, thank you for listening throughout the year.
We wish you a happy, healthy, and prosperous new year.
We'll be back in 2026 with more insights from the ship recycling markets.
Au revoir, 2025, and onward to 2026.